Hello and welcome to the latest episode of Chart TV. My name is Malcolm Gordon, and in this episode we're going to follow up on the research we did on seasonality, how to determine seasonality in the market that you're interested in trading. Okay, what we have here is a chart we've seen before. It's the seasonality of the Australian SPY 200 futures market, and we can see here that in blue are the up months, and in the other colour are the down months, and we can see here that December was by far a very bullish month, whereas the most bearish month turned out to be June. So determining the seasonality of a market helps us to pick and choose our battles and determine when it will be favourable to enter a market on the bullish or bearish side. So what I've done now is I've gone on to move on from this research. I've decided to determine by how much on average these markets were up or down since April 1983. I have data here for this market going back to April 1983 up until the about 2006, 2005, and what we have here is that we can clearly determine that April is by far one of the most bullish months. On average it's up 3%, and here we have December, which turned out to be the most bullish month. On average it was up over 2.5%. So we can clearly see from this that December it's a good idea to be long in December in this market. Quite surprisingly, July was on average up 2.5% since 1983. Does this mean that these trends will continue? Well, you never can tell. Anything is possible, but the best we can do is look at the past to help determine the future, and hopefully we can use information like this to determine to give us some valuable insights into what a market's like to do. Interestingly, October, November and June were the most bearish months. On average they are down months, so that's one to look out for, and we can see that not much really happens in February. So now you're probably wondering how I determined how I got these stats, got these results. And basically what I've done is I've gone and taken a spreadsheet of basically the open, high, low, close data, and I've shown in previous episodes before how to get this free from Yahoo. If you haven't seen that video, look it up, and that will show you how to go and find free end of day data on the net. It's right there, it's free, so why not make use of it. Basically what I did is I went and got the I took the close. I took the close of the month. So say here we have. Okay, let's scroll down to some more recent data. Okay, let's say I took the close of for June 2004, for instance. I took the close of the month 3679 from the open of the first trading day of the month. So that would be 3560, and I plonked it into a spreadsheet like this. So June, so here we have the months up the top and the years down the side, and basically what I did is I divided that difference by the close of the previous month, and what we had here, which was 3462. So what we had here is sorry, should be looking at September. In September 2004, the market made 119 points, and the close of the last trading session of the previous session was 3546. So that equated to a 3.36% rise. Now what I did is I went and calculated these stats for each and every month from April 2005 to April 1993 to April 2005, and I came up with down the bottom you'll see a tally of the average percentage move, and see we can have here January is 0.58. Is 0.58% up on average. February is 0.13%. March 1.34%. The most bullish appears to be April, which was up 3.07% on average for this time period, and so on and so forth. Most bullish month appears to be, most bearish month appears to be October with minus 0.6%. So October appears to be the most bearish month in terms of average moves. Now, this sort of research, you can go and grab the OHLC data and do this sort of research yourself, and hopefully it might provide some useful insights for you. Okay, my name is Malcolm Gordon. This has been another episode of Chart TV. Thanks for watching.